Hey there, fellow investors and market enthusiasts, and welcome back to another insightful video on DailyCrest. I'm your host, Mercy, and today we're diving deep into the latest financial headlines, straight from the world of international markets. We're kicking things off with a high-powered gathering of economic minds at the Jackson Hole Economic Symposium. Christine Lagarde, Jerome Powell, and Kazuo Ueda shared their thoughts on the global economy. Let's break it down. Just a couple of days ago at the annual retreat, Federal Reserve Chair Jerome Powell gave a stern warning. He emphasized that inflation is still running too high and that economic growth is a bit too hot for comfort. Powell made it crystal clear that the Fed won't budge on its target of achieving a 2% inflation rate. So brace yourselves, folks. Interest rates might continue their upward climb and remain restrictive for quite some time. Now let's talk about the markets. After a 3-week losing streak, U.S. stocks finally caught a break. The S&P 500 and NASDAQ Composite rallied, and even across the pond, European markets managed to close a tad higher. The excitement wasn't limited to the West, as the Asia-Pacific market soared into the final week of August on a positive note. And speaking of positive vibes, China decided to give its stock traders a reason to smile by having its stamp duty on stock trades. The Shanghai Composite responded by jumping a whopping 2.3%, and believe me, that's a significant leap in the world of stock trading. Now, let's delve into a tale of two stocks. China Evergrande Group, one of the world's most indebted property developers, saw its shares plummet as much as 87% upon trading resumption. Contrast that with Chinese electric vehicle company XPeng, whose shares soared over 13%, thanks to a massive $744 million deal with Didi, the Chinese ride-hailing giant. Shifting gears a bit, did you know that China holds a tight grip on the market for rare earth metals? These metals are crucial components in products like electric vehicle batteries. U.S. Trade Representative Katherine Tai expressed concerns about the vulnerability of U.S. supply chains due to China's dominance. And U.S. Secretary of Commerce Gina Raimondo's visit to Beijing adds another layer of intrigue to the global trade scene. Here's a little preview for all you data enthusiasts out there. Keep your eyes peeled for the Personal Consumption Expenditure Report, set to release on Thursday. And mark your calendars for the August Jobs Report, dropping in on Friday. These two key pieces of information will give us a better idea of whether the Fed will stay on course with raising rates, as Powell hinted, or if the economy's cooling down enough to keep rates steady. Now, let's unravel the enigmatic words of Jerome Powell, the Federal Reserve Chair. His recent speech had the markets abuzz, but were his words hawkish or dovish? Let's break it down. Powell mentioned, "We are prepared to raise rates further if appropriate, and intend to hold policy at a restrictive level." Sounds pretty straightforward, right? Well, not so fast. Powell's words are like a dance between two meanings, open to interpretation. It's like saying, "I'll have a salad for dinner if it's suitable for my waistline." But if you spot fried chicken, that salad plan might just fly out the window. Powell's words are poetry, guiding us through uncertain times. He admitted that the Fed is navigating by the stars under cloudy skies and markets. Well, they're the critics reading between the lines. Despite Powell's seemingly hawkish tone, markets latched onto his observation about GDP growth and consumer spending, painting a picture of a hotter-than-expected economy. And guess what? Markets rejoiced. The S&P 500 and NASDAQ Composite wrapped up their first winning week in 4, fueled by optimism about the economy's future. But remember, the stock market is like a symphony, interpreting Powell's words with its own rhythm. So, my fellow investors, as we conclude this insightful journey through the latest financial landscapes, remember this. Powell's words may be open to interpretation, but they hold the power to shape the economy's path. Stay tuned for more updates right here on DailyCrest. Don't forget to like, subscribe, and hit that notification bell so you never miss out on our market analyses. Until next time, this is Mercy signing off. Happy investing.